Yeah, look, I think that they did basically what the market consensus was expecting. They've gone and increased asset purchases by 100 billion. I find it interesting that they're taking a bit more time in doing so, and saying that they're going to complete the purchases by the end of the year. I thought they would have done that by August, by the August inflation report. So it does suggest they're a little bit more constructive, or let's say a little less pessimistic than they were before. Although they do highlight the caveat that there was a huge degree of uncertainty regarding the outlook. So broadly speaking, they've done what we expected. No more news on negative rates. Let's see what they have to say in the press conference later this afternoon. Broadly speaking, you still don't have a huge. There's still not a huge, I would say, impetus to buy UK assets. Sterling for me is still a sell at this point.
And what about on the economic front? You say not enough here to make you want to go buy sterling, but they have said that evidence from more timely indicators suggests that GDP started to recover after April. So giving a little bit of hope that the UK economy is perhaps proving a little bit more resilient than expected.
Yeah, I think it's a question really of measures and degrees. That we're seeing some growth certainly from April onwards, and that's consistent with what we're seeing pretty much all around the world. But the question is really whether the speed and scale of the UK, let's say, recovery is in line with what we're seeing elsewhere. And I have some doubts in that regard, simply given the fact that we still have lockdowns in the UK to a greater or lesser extent. And certainly we've seen that Europe and elsewhere has actually opened up much more quickly. So on that basis, I think that we have seen a recovery, but it's not really fast or vigorous enough to tempt me to buy UK assets at this point.
And finally, you mentioned negative rates. We haven't got anything new here yet. We're going to have to wait for more commentary to come through from the Bank of England governor. But just lastly, on inflation, the Bank of England now saying CPI is expected to fall further below target in the coming quarters. Clearly, the pressure near term is elusive. But what about medium long term? How are you thinking about inflation risk?
I'm not considering it all that significantly. The reason being that it's basically impossible to calculate inflation at the moment, because a lot of the normal sort of consumer durables, items we have in a basket just aren't available. I think the BOE themselves reckon about 14% of a typical consumer basket simply wasn't available for purchase in the last month or two, and that's going to continue to be the case. So what you'll find is that most central banks just really won't pay all that much attention to inflation anytime soon, for the next 2 or 3 years. And the fact that we have now got basically symmetric inflation targets where, central banks are allowing for inflation overshoots, that basically tells you central banks really don't care that much about inflation anytime soon. And I think that's basically the way it's going to be for the next 2 or 3 years.